Doing business in Africa. You can't afford to be without Africa Investor.
On behalf of Africa Investor, I'd like to welcome you. It's my great pleasure to welcome you here to the second African Sovereign Wealth and Pension Fund Leaders Forum COVID-19 Virtual Roundtable. My name is Hubert Danso, and I am the CEO and Chairman of Africa Investor, and I will be the co-chair for today's roundtable. Before we start, I'd like to extend a warm welcome to each of you, in particular the delegation from the International Federation of Sovereign Wealth Funds, colleagues from the Saudi Arabian Public Investment Fund, the CEO of PGGM, one of Europe's largest pension funds, the CEO of the World Pensions Council out of Paris, CEO and chairman from BATSETA, South Africa's largest association of pension funds, which essentially represents 70% of all pension assets under management across the entire continent of Africa, including the Government Employees Pension Fund of South Africa. I'd like to welcome our colleagues and friends from One Planet, which is President Macron's group of the leading and largest sovereign wealth funds committed to climate change. Also the CEO of the Ghana Infrastructure Investment Fund, the CEO and chairman of the Kenyan Consortium of Pension Funds, the CEO of the Nigerian Sovereign Investment Authority and our co-chair for today, the CEO and leadership team from Itmar Capital, Morocco's Sovereign Wealth Fund, the CEO of Erscom Provident Pension Fund, CEO of FONSIS, the Senegalese Sovereign Wealth Fund, the CEO of the Egyptian Sovereign Fund, the Kenyan Sovereign Fund Chairman, the CEO of the Government Institutions Pension Fund of Namibia, representatives from Chicago Teachers Pension Fund, Casey Family Programs Endowment, and all other sovereign funds and leaders here present. You're most welcome. Again, I'd like to thank you firstly for making the time to participate in this consultative roundtable process. As they say, a week is a long time, particularly in the times that we live in, not just in politics. In other parts of the world, particularly around the globe, we're now seeing China reopen in many respects its economy. The US set out its criteria and framework yesterday for states to reopen their economies. Germany and Denmark are sending their kids back to school. And the oil war is gradually, or it looks apparently, although I wouldn't bank on it holding, it looks like it's subsiding enough to support a Q2 sort of 20 Brent oil price forecast of about $35 per barrel, and genuine prospects, hopefully, of the price reverting to the long-term equilibrium of about $50 per barrel in 2021. I think, as we mentioned on previous roundtables, there are a number of important initiatives that I'd like to just restate and share with you again that are being taken by our constituency and key stakeholders within our ecosystem as asset owners and financiers. Firstly, our colleague who's going to speak about it a bit later on today, the Nigerian Sovereign Investment Authority has allocated $150 million from its stabilization fund to fight COVID-19. The Moroccan government is establishing a COVID-19 dedicated fund to tackle the pandemic. The African Union and the African private sector have put together a COVID-19 response fund, seeded with about $150 million, with aspirations and progress towards $400 million. The African Development Bank has listed a COVID COVID-19 social bond on the London Stock Exchange, and established a $3 billion COVID-19, and established a $10 billion COVID-19 response facility. Our friends and colleagues at the African Export-Import Bank have established a $3 billion COVID-19 trade facility. And on the international front, you're seeing asset owners and pension funds taking a number of steps. Caisse de Dépôt of Quebec, CDPQ, have established a $4 billion facility for investments to support locally affected businesses in Quebec, and a $300,000 community donation assistance. We're seeing innovation from the Russian Direct Investment Fund, RDIF, which is Russia's sovereign wealth fund, that's invested in a diagnosis system for the detection of COVID-19. The Multilateral Investment Guarantee Agency has launched a $6.5 billion fast-track facility to help investors tackle COVID-19. And the European development finance institutions, with a number of support lines to millions of productive jobs in Africa, this week announced the COVID-19 African private sector job protection measures that they will be pursuing, including but not limited to mobilizing new capital, increasing risk tolerance, temporary suspension of minimum return requirements, and new credit lines and guarantees from donors of between 2 to 5 billion euros. A significant number of African countries, as you've seen in the press, have received IMF debt relief and disbursements. But in spite of this, our continent's COVID-19 statistics, as of yesterday, recorded 17,701 cases, 916 deaths, and 3,585 recoveries. And we still have not peaked yet. So colleagues, our work continues, and today's objective is to advance and give practical effect to our inaugural roundtable consultations by translating our 7 recommendations into practical actions and proposals. These recommendations relate specifically to our 2 major thematic areas guiding our roundtable consultations, which is the first being to look at immediate priority responses to protect African capital markets, SMEs, supply chains, and the African continental free trade area from the economic fallout of COVID-19. And the second anchor thematic area is to focus on partnerships with regulators to foster industry shifts and the next normal regulatory environment required for African economies and industry to not only thrive, but to also grow. Just to restate, the 7 recommendations are to recommendation number 1, collaborate on SME and supply chain and trade support initiatives through digitization, particularly trade and fintech, especially in the healthcare and the agri sector, and in the sort of trade enabling regtech environments. Recommendation number 2 is to pursue ESG compliant infrastructure co-investment partnerships with a heavy emphasis on energy, healthcare, agri and trade related infrastructure, to build that resilient infrastructure, not only to fight today's COVID-19 challenges, but also to anticipate and mitigate for future pandemics, which we have good information that we will see each and every 6 years at least. Recommendation number 3 is to develop and communicate seminal pandemic combative institutional investment models and approaches to investing, and unleash a new degree of creativity in that respect. Recommendation number 4 is to champion institutional investor research insights, where we can share some of our expertise and our knowledge. We are much more than capital. We are beyond capital in terms of our long-term capacity and expertise. So recommendation number 5 is to motivate governments to consider directing some of the quantitative easing and emergency funding towards sovereign wealth funds to allocate and invest into their local and regional economies. Recommendation number 6 is to engage in policy partnerships, principally with central bank governors, on framing the new regulatory environment and investment needs of the post-COVID-19 economy. And recommendation number 7 is to coordinate and correlate, in particular, responses with global peer institutional investor and private sector industry bodies. We have a number of really good people that are going to be joining us today. But before that, we all agreed at our first roundtable that, as African institutional investors and global institutional investors and the institutional investment community as a whole, we are uniquely placed to support African governments and policymakers through our unparalleled expertise on long-term investing. And we can really help the policymakers plan for and anticipate long-term investment needs, risks, and priorities, so African economies can stabilize, grow, and thrive, as I mentioned before, in the new post-COVID-19 economy. And especially, what we're going to be focusing on today in that respect is really looking to table some very specific ideas and proposals and next steps for each of the 7 recommendations, and share a number of different perspectives. And a number of our leaders here are going to be talking about the role of African sovereign wealth funds in the response to COVID-19 and the context of the 7 recommendations and more broader views. And roundtable speakers for today include Mr. Solomon Asamoah, who is the Chief Executive Officer of the Ghana Infrastructure Investment Fund, Mr. Uche Orji, who is the Chief Executive Officer of the Nigerian Sovereign Investment Authority, NSIA, Mr. Mbui Wagacha, who is the former acting chair of the board of the Central Bank of Kenya and chair of the Kenyan Sovereign Wealth Fund. We have Mr. Ayman Soliman, who is the Chief Executive Officer of the Sovereign Fund of Egypt. We have Mr. Duncan Bonfield, who is the Chief Executive of the International Forum of Sovereign Wealth Funds. We have Mr. John Denton, who is the Secretary General of the International Chamber of Commerce in Paris. We have Mr. Obed Amran, who is the Chief Executive Officer of Itmar Capital, the Sovereign Wealth Fund of Morocco. We have Mr. Demba Diallo, who is the Chief Executive Officer of FONSIS, the Strategic Investment Sovereign Fund of Senegal. We have Mr. Eloy Lindiger, who is the Chief Executive Officer of PGGM Investment Management from the Netherlands. We have Mr. Nick Bursley, who is the Director General of the World Pensions Council. And we have Edo Amanoven, who is the President of the African Securities Exchanges Association, ASIA. But before we kick off, by way of housekeeping, please ensure your computer audio is on mute. The roundtable format today is that each discussion leader will speak, and that we will address all questions at the end of the succession of speakers' remarks. We're on a strict 5-minute for each speaker regime to allow for time for discussion at the end. So please be concise. So to get us going, I'm going to jump in and address recommendation number 1, which is to collaborate on assisting SME supply chains and trade support through digitization, e-trade and fintech, especially in the healthcare and the agri-related sectors. And it's my pleasure to introduce to you now the Africa PLC initiative that we're working on with a number of key strategic partners. So I'm going to open up my screen for you to get a view and just take you through a presentation which I believe will really address this particular area. We have some phenomenal partners like the International Chamber of Commerce, like the Chartered Institute of Purchasing and Supply, like DHL, like the African Continental Free Trade Area Secretariat, Standard Bank, Absa Bank, Trade Development Bank, the Ghana Infrastructure Investment Fund, and a number of other key partners, driving the to make this a really operational and exciting support platform for SMEs, corporates, and procuring governments. So I'm now going to start the presentation. So I'm going to seek to share my screen with you, and I will count on you to tell me that you can see what I have there. Do you see a slide that says Africa PLC?
Yes.
Okay, wonderful.
We can.
Okay, fantastic. So as I mentioned, this particular recommendation addresses some of the key issues that have been thrown up by COVID-19. I think we are all very familiar with the concept now of social distancing. And it's really taught us to really exist and function in a very digital environment. So excuse me, I think my screen has gone to the wrong one. Let me just hopefully enlarge it for you. Great. So what we are looking at here is an initiative that I'm going to talk you through, which is one that addresses, in our view, social distancing, but also takes account of how we can enfranchise and support small and medium-sized enterprises, the African private sector, and key industries on a pan-African basis that ultimately drives SME enfranchisement and uses technology to help the private sector, our own private sectors, develop local supply chains. One of the key things that's come up as a consequence of the challenges that have been thrown up by the pandemic are the whole issue of the lack of access to the inputs and our overall dependence on global supply, and the lack of investment in our own domestic infrastructure related trade, logistics, supply chains. So I think many of us have heard about the African Continental Free Trade Area. I think it's probably one of those initiatives that we can probably remember calling for about 15 or 20 years ago. In 2015, the leaders from the African Union came together and made it happen, put all the necessary protocols in place, and created what is commonly regarded as a $4 billion market opportunity, and essentially, by virtue of number of countries, the largest trade area in the world. And, we've looked at this and tried to understand, at the political level, we seem to have an environment now that is going to work for us. And now we need to see how we can work for it from a private sector standpoint. So we have been working very closely with the African Union, because I also chair their Continental Business Network, which focuses on bringing institutional capital and project and structured and long-term finance to support Pan-African infrastructure investments. And this was one of the initiatives that we are focusing on there, to really not only just look at how we can support big business, but how we can also support small and medium-sized enterprises in a digital environment. So Africa PLC is the current sort of name of this particular initiative, to bring the African private sector, African capital, into being able to create that digital economy for the continent. So essentially, Africa PLC at its most simplest as an initiative, and hopefully in line with our recommendation, is designed to be an innovative platform that supports our governments procure, as they are some of the largest procurers on our continent, on a business to government basis, as well as a business to business level, because we've seen a lot of business to consumer, B2C in the market, but we're looking to accelerate our own degrees of industrialization and create the conditions for our ability to scale the private sector. So, you know, we have taken the view and worked with a number of great partners. Some of them are on the call now. We have the International Chamber of Commerce, we have the UNDP, we have Sovereign from the Ghana Infrastructure Investment Fund, because it's been made very clear that this ultimately is what's going to be required to build a resilient African private sector, one that can function and compete digitally, one that can, you know, access and stimulate local industrial economic development by, you know, looking at the opportunities for funds like, you know, African asset owners, as well as institutional investors from abroad, to be able to invest in very productive domestic economic infrastructure. So this is a platform that will be able to intermediate key data to look at where the specific opportunities and needs are. It will give opportunities to be able to promote and profile the actual companies, the key buyers, the sellers, the financiers, the ancillary service providers, and the actual trade financiers, all in one environment. There's one thing that we've seen a lot of from the you know, this whole pandemic, which is everyone is now trying to procure PPEs, personal protective equipment. There is no one single place on the continent where we can actually go right now and even understand who can supply that in the continent, you know, what the best procurement opportunities are there trade, finance, and other insurance-related products that can support that. So this is the type of digital environment that will bring together all of those different pieces. The role players in terms of the companies, buyers, the sellers, the financiers, and in this particular platform, we're actually looking at focusing on, with the partnerships that we have, and in particular with the UNDP, we're looking at 5 pilot countries, and we're going to be starting, because of the COVID response, by focusing on the healthcare and pharmaceuticals industry, as well as the agriculture and the agribusiness and the FMC vertical, purely because of the food security dynamic, and the healthcare and pharmaceutical industry for obvious reasons. And you will see that there are a number of other ones that will come online later: automotive component parts, construction and engineering, and so on and so forth. So, you know, I wouldn't spend too much time just talking about the trade complexities that exist in continent, but I think it can be summed up in the saying that we hear from a lot of our politicians, and ultimately the one-liner that almost got the African Continental Free Trade Area over the line, which is, you know, as a continent, we produce what we don't consume, and we consume what we don't produce. And that has essentially led us to not addressing a number of these different trade barriers and investing in the local critical supply chains that would be potentially a big difference maker as we address this pandemic around the PPEs, the food security related issues, and as well as the trade related infrastructure that we would need to be able to evacuate these particular goods and services and opportunities on a continent-wide basis. So ultimately, this just shows you very briefly and quickly that what this will do for the small and medium-sized enterprises, marketplace for the buyers, that one-stop environment that I just sort of mentioned, offering logistics solutions and trade finance. The logistics partner here is DHL, and it also creates an opportunity for an aggregation of many other suppliers. And at the bottom line, it just reduces the cost and the friction of actually transacting and trading. For the corporates, it's a procurement hub with your typical ERP type solutions to enable and assist larger corporates to be able to enfranchise their own supply chains, to be able to do more business with a much wider and more easily identifiable community of buyers and sellers and financiers. The reason the governments are so supportive of this is because it's going to really help them as the budgets tighten. This is going to really help them look at how to rationalize procurement. So one of the key tenets and features of the government solution is the crowd buying procurement hub, which will be able to direct spend on a conglomerated basis to unlock greater efficiencies. And of course, in line with what a number of the governments want to do, there's a big local content metric in there, which enables governments to be able to address some of their local content aspirations, as well as help the local manufacturers get access to the trade finance, because some of the governments are actually going to be funding them. And you will just see the way that it's constellated. At its most simplest, it's a number of vertical markets, as I said, by industry, and then it's the ancillary services, export credit insurance, trade finance, and a number of other services that one would typically see in the value chain around any particular transaction. This very quickly shows you how the companies will log in, and this sort of highlights the blockchain trade finance component and the initial offering: auto settlement, bank payment undertakings, bank payment undertaking financing, and invoice financing. And we've been able to bring together for this project an impressive group of banks from across the world, and to link in with banks from across the continent, all providing trade finance to address our $120-odd billion trade finance deficits that we actually have on the continent. So these banks, for the first time, will be able to work together on a blockchain hyperledger platform, which has been graciously developed by IBM. So that ultimately will give the platform and the African private sector procuring governments access to a global environment, and it will also give the globe and the main economic trade and investment players access to trade on the continent. This just very quickly shows you the tenets of the partnership with DHL. It's essentially a big logistics partnership. So they've got a fleet of aircrafts that are already being employed to address some of the PPE and other supplies across the continent. And these just show you Johannesburg, now Lagos, Abidjan, and Libreville, which is where we have the current aircrafts that are being used. One part of this will be to recognize that, and again, this may be opportunities for some of you on the call, or people within your networks will be establishing, and they'll be investing in the development of e-commerce performance centers in key hubs across the continent as we move that much more into a digital environment. And I had a long call this morning with the team that's actually focused on working with digitizing and moving towards a paperless customs system. So in this case, a lot of the customs administrations have weak infrastructure. The servers aren't appropriate. The levels of connectivity are non-existent to enable them to be able to expedite an automated and paperless system to be able to efficiently transact and process a lot of the private sector's requirements and all sort of goods. So this particular component of the partnership will be looking at a strategy to assist our customs administrations go paperless, with what the phraseology that was coined is customs distancing, where it can bring the customs industry much closer to the whole safety of its employees. It can get access to technology because there'll be a cloud-based solution which will save the customs administrations themselves having to invest in the relevant software and hardware. So that just sort of gives you a picture on that side. And these are just sort of highlights where we where we sort of talk to the partners and the players that have invested in the platform to date. You know, it's got a great team, very dynamic team working across the continent. And again, from a business standpoint, as we are business people, it really does represent access to a $4 trillion opportunity with differentiated value propositions, and of course the growth potential in this new normal environment for our own domestic companies that we're going to be called on by our own governments to find very practical ways to support. This is going to be an issue. And then, of course, the partners that can make this happen and the access to global markets and global markets access to the continent, we think make for an interesting opportunity. So I'm going to stop sharing at this point, and just sort of leave that for you to be considering as you, and then raise any questions that you want. As I mentioned, we're going to go from one speaker to the next. So that was just our view on what could constitute a good initiative that we can take forward or we can support. The way that we're working with the UNDP is we've, as I mentioned, it's South Africa, Senegal, which is the other country. It's South Africa, Senegal, it's Ghana, it's Nigeria, and it's Ethiopia that are the starting countries. Ethiopia, because it's been designated as the PPE distributor for the entire continent for medical supplies on behalf of the African Union. Ghana, because that's where the African Continental Free Trade Area Secretariat is based, and this is going to be a key platform for the African Continental Free Trade Area to engage with the private sector and the procuring governments. Senegal, because it's got a key critical hub component for a number of the humanitarian aid organizations, so that will assist them be able to procure from that standpoint. South Africa, the South African government are very supportive, and of course, South Africa currently holds the chair of the African Union and is a big driver and will be convening African heads of state on the African Continental Free Trade Area, and there are lots of key players on the ground at the moment that are making a difference, and that will be contributing to this. Now, this does not mean that any of you are on this call from the continent can opt in and say, we would love to be able to work on creating this in Egypt or creating this in our own market. John's on the line. John and the International Chamber of Commerce are one of the partners, so all of the local and domestic chambers of commerce will also be brought on board in terms of the initiative on the platform. And in many cases, I'm sure that a number of these companies are ones that you feature in your investment portfolios in any respect. So I'm going to leave it there, and I'm now going to move on to, that was recommendation one that I just addressed as a potential concrete idea and proposal that responds to the recommendation. I'm now going to call on Solomon Asamoah to address the recommendation number two, which is to pursue ESG compliant infrastructure co-investment partnerships with a particular focus on energy, healthcare, and the agriculture. One of the key things that we work on through the Continental Business Network as the investment interlocutor with African heads of state, and in particular, they have a group that I have to work closely with called PC, which is the acronym, which is the Presidential Infrastructure Champions Initiative. And that is chaired by President Cyril Ramaphosa, the current chair of the African Union, President Kenyatta, the president of Nigeria, the president of Egypt, the president of Rwanda, and a number of other, the president of Ghana now, and a number of other presidents, about 14 presidents, who are looking to us to give them not only technical, commercial direction and advice as the African institutional investment community about what they need to put in place to be able to create more attractive investment opportunities. But also they're looking for our input and guidance on what regulations should they put in place. You know, we have a number of pension funds that want to invest in infrastructure, but sometimes we're told it's an illiquid asset class, or it's not structured in the way that it needs to be structured. So, you know, this group here and this particular recommendation, I think, can also fulfill their deep passion and desire to see more co-investments at the institutional investment level in Africa, drive some of the major projects. So over to you, Solomon.
Thank you, Hubert, and good afternoon to everybody. During the introduction, I was feeling intimidated and humbled to be part of this group. So I'll give you a bit of my thoughts and my recommendations on infrastructure. A couple of things I'd say first. Number one, I mentioned this last week when I spoke, is that with all the furor and all of the activity and all the focus on, and rightly so, on solutions to the COVID-19 endemic, I think it's also very important that we as holders of institutional capital don't allow ourselves to be sucked into providing funding for things which ultimately are best handled by the donor community and subsidized funding. So we can be a very good conduit, we can be a very good vehicle to make sure that responses to this pandemic go more smoothly and do our part. But I think it's very important that at the end of the period of time, we haven't lost our firepower in terms of the capital that we have for some of the long-term considerations. So the way I've interpreted this recommendation, this topic, is what is it that we as a group, playing to the audience here of sovereign wealth funds, pension funds, can do to attract and sustain more investment in infrastructure assets in our respective countries around the continent. And I think for something like this, I think we have to be honest. We have to look back and ask ourselves what has happened, what has worked, and what has not worked, and why in terms of attracting investments. The old phrase is often said that the challenges with infrastructure in Africa is not a money issue. It's really a bankable projects or the right kind of projects issue more than a lack of capital. So we have to ask ourselves some of the hard questions, which is why have we not unlocked more financing, and why have we not essentially closed more infrastructure financing transactions that can facilitate our development? And we actually do. You can even go one step further. Over the last, I'd say, decade, there's been a number of Pan-African infrastructure funds that have been established to try and address these issues. And many of them have struggled to deploy capital, and let's say the results have been very mixed. So that's one of the areas and the issues that I think we have to be frank and ask ourselves. So when I look at this issue, I ask myself, what if I had some infrastructure opportunities in Ghana? How can I use this august group around the screens now to actually raise some financing for that? Or potentially my counterpart in Nigeria or Kenya or Senegal or Morocco, can we use this platform or this group of people, this group of institutions to facilitate the investment flows? And I think that's the basis of what we need to discuss. Just to give you 2 minutes on the experience of my institution. So the Ghana Infrastructure Investment Fund was set up with $325 million of capital from the government of Ghana. And it was put in a permanent investment capital vehicle, essentially with the mandate to invest and develop more infrastructure assets in Ghana, really try and bring other people's money into Ghana to invest alongside the Ghana Infrastructure Investment Fund. It's actually quite a unique model in Africa in the sense that how often do you know governments who provide a large amount of capital and then allow the day-to-day decision making to be taken by non-government people? And that's the model that we're trying to implement here. So we, even though we have government money, we price for risk, we do thorough due diligence, we see the world the way other investors see the world. And if a project doesn't meet our risk and our return criteria, we pass it, even though it's government money. And I think that's probably one of the cornerstones of how we can be successful. When I look at most of the other institutions across this screen, most of the other pension funds and sovereign wealth funds, they also have a return obligation. they also don't want to lose the funding. So if I can prepare transactions that fit my criteria, that solve my issues, I think it may be more easy for me to attract some of you investors who have if you have the mandate to invest outside of your respective countries, to come alongside me and invest with me in my infrastructure transactions. And vice versa, I suspect. If I was allowed to invest in Egypt or Morocco, but I was introduced to the transaction by the local sovereign wealth fund who had done the initial work, structured it to my criteria, and was coming alongside me, that would probably facilitate my approval process to invest more faster. And I think we don't do enough of that. And that's one of the areas that I think we should explore on this particular topic. The other thing I would say is just quickly, in 3 years, the Ghana Infrastructure Fund, we've managed to invest $240 million of that $325 million in a portfolio of 8 infrastructure assets across Ghana, from the new airport terminal to the expansion of a new port, to tourism sector projects, to ICT, building a whole new broadband fiber across half of the country. And for each of our investments, I'm very proud to say that for every dollar that we have put in as the Ghana Infrastructure Investment Fund, we've managed to raise $10 of other people's money to invest alongside us. So I think our model works. And if I could just say what I think has been the key facets as why this has been successful and is interesting, is because we all know in our respective countries, particularly in Africa, that infrastructure investments don't follow a textbook path. It's not a question of you put all of the right numbers and the right descriptions on a platform and then people come and invest. There's nuances. There's the relationship with government. There's vested interest that you have to manage. There's sources of capital, local and international, which have to be carefully managed. There's the quality of the sponsors. There's all of these issues that are very important that don't always come out when you're looking at a description of a transaction. And the other big elephant in the room that I've noticed is that what kills a lot of us in the investment community is the time that we spend on projects that don't close. And the reasons why they don't close isn't because the project is not fundamentally sound. It's because there's probably some vested interest or some invisible person in a suit somewhere in the realms of government who's threatened by this project and doesn't want it to happen for whatever reason. And it's up to, I would say, institutions like ours on the ground who can really get an understanding of those dynamics, and through careful selection, we'll know there's no point spending time on project A, even though it looks fantastic. It's not going to be allowed to close. So we focus on project B and C. And that is the insight that I can bring for Ghana, anybody interested in investing in Ghana. If anybody has tried to invest in Ghana, you'll realize a couple of things. That Ghana, although on the surface looks like a very easy place to do business, when you actually try and do specific transactions, it's very difficult. And many transactions that look good don't actually close. So I think that is something that we can share and work amongst ourselves to increase the success rate of closing infrastructure investments. So that's what I wanted to raise for discussion, for people's thoughts. I think there's probably 3 questions that we want to ask ourselves. One is, how can we amongst ourselves, show each other interesting investment opportunities that have already been screened by knowledgeable people. It may not be you yourself in the country, but you know of an institution that has done the preliminary work and is satisfied, and they work to a high standard. How can we show each other these types of transactions? Then how can we second question, how can we co-invest together more easily? Are there regulatory barriers or other barriers that prevent us from investing across our borders, for example? And are there ways that we can identify what some of those barriers are? And then thirdly, exploit or provide possible solutions to solve some of those barriers. So those are the three questions that I think we should try and cover. And Hubert, that's my 5 minutes introductory on my topic. Thank you.
Wonderful. Thank you very much, Solomon. Straight to the point and honest and open as ever. I think you've touched on a number of the different points that were naturally covered in the recommendation. Of course, the key sectors as it relates to COVID are how can we as a community originate healthcare infrastructure related opportunities to address where we are now and the anticipated future potential pandemics. Similarly, around sort of the agribusiness and the trade related infrastructure. And I think you just nailed the point. The point simply is we are all sitting on good data, good intelligence about well-structured investment opportunities that could meet our investment profile and criteria. So the more we can do within this group on co-investments, starting at a very preliminary and basic level, just in terms of sharing information on what our project pipelines look like, I think is a very impactful and easy way for us to start. This is how the Australian pension funds manage to work. As I mentioned last week, you have John Denton on the line, who sits on the board of one of the largest pension fund infrastructure platforms, and it's over 20 pension funds in Australia just came together and said, let's create our own vehicle, let's back that vehicle, let's share information, let's build a team. And now Australia is probably one of the leading institutional infrastructure investors in the world. And we see that model happening in other continents where a co-investment approach. So we're happy as the Continental Business Network and some of the things that we're doing to continually promote that particular aspect. And I'm hoping that it's Ayman in Egypt or Uchi in Nigeria or other colleagues, the South African Pension Fund Group or Sandeep, got a consortium of pension funds in Kenya. The more we can share that data around pipelines, the more we can not only invest in our own markets, because we only have 5% intra-African investment level at the moment. Now, intra-African trade was only 14 to 16%, and we had to create a big initiative like the African Continental Free Trade Area to correct that. Intra-African investment is in a much worse place, 5%. And these large catalytic infrastructure investments and collaborations between pension and sovereign funds is something that we're very keen to drive and ask, and then our heads of state for some regulatory incentives to make it easier for us to do so. But we can come back to that later on. Now I'm going to move on to another recommendation number 4. You'll note that I've skipped recommendation number 3. That's Uchi's. I've subordinated him to later when he can join. So the floor is yours. You're addressing recommendation number 4 about championing institutional investor research insights. Over to you. And if I can just move to somebody else, and then we'll come back to you, because I know that some people are pressed on time. Ayman, if I can call on you, please, to address your recommendation number 5, and then I'll work behind the scenes with Dr. Wagacha. And your recommendation, the one that you raised, which is to motivate governments to consider directing some of their quantitative easing and emergency funding towards sovereign wealth funds to allocate and invest in their local markets. The floor is yours.
Thank you. Well, that was inspired during our last conversation, and actually with the example of the Nigerian experience, where they directed some of their funding towards to be spent through the sovereign fund. The premise of this idea is governments. The initial reactions of governments are debt relief. For instance, in our market, the first action taken by the government was a 300 basis point cut in the reference lending rate of the central bank. So they've pushed aggressively towards reducing the cost of borrowing, specific payment rescheduling directed towards SMEs, directed towards the sectors that are mostly affected, like the tourism sector, most of the services sectors. Once these sectors receive that relief, yes, that cascades to a short-term solution, but it doesn't really unlock the issue. Those businesses are going to be piling up more debt at a lower rate, but they are still piling up more debt. So the direction goes towards equity. And this is where the thinking of directing a portion of your emergency funding towards the sectors that you know are one priority to your local economy. The nationalistic pressures rise when you want to have your food security, when you want to have your medical security. These come at the forefront of your priorities, and they come to mind where with closed borders and with lockdowns, what do we have to work with? So directing some of those investments towards either distressed businesses, and that should be a temporary measure. So this is a quasi-equity participation or an equity participation that goes through public market instruments where you are able to retract that back or monetize that as the market stabilizes. And you carry your gain as a fund through that a position that you've taken. And back to what Hubert mentioned earlier, we're banking on the pedigree of the professional teams that are there in the sovereign funds that are able to conduct a buy-side investment, craft an investment agreement that does not portray maybe a nationalization. This is not a nationalization drive. This is not a lot of rhetoric has been around how China managed to use this to its advantage, and they're buying back a lot of private sector ownerships to the government. We should not be doing that. If any, I would imagine that these QE spends should go into minority positions, creating fresh partnerships, public-private partnerships, with a view of banking on private sector management and talent and capabilities, while enabling them and scaling them up to deliver and fulfill priorities that are national priorities to the local economy now. And you can extend that to regional economies. And in my view, neighboring countries can extend that mandate through their own funds. And this collaborative use of capital. Africa is by design stripped for capital, so you can maximize your firepower. Back to Solomon's point on you have your slew of infrastructure projects. When you look for partnerships, you maximize the firepower of what you can do with your capital to deploy to the maximum number of projects through partnerships. And that rests on creating the right product that is attractive and aligned with investors across the board. Infrastructure projects, which are a focal point of this forum, remain to be an active asset class that has not been as adversely affected by the COVID and the lockdown. Appetites remain to be solid in that respect. Investors, be it from the Western market or the West or the East, as we said in Africa, we see Asian money coming in, we see Gulf money coming in, and we see Western money and European money coming in that are looking at the infrastructure play, particularly in Africa, and which is a very solid support in my view. If we are able to convince our governments to share the same priorities that we have, now that you read and you have the sense of the appetite and sentiment of the investor world, it is your responsibility to go back and relay that back to the government, educate your government officials about what your reading is of the world, and based on that, this is a de-risked investment of those emergency funds going in the right products or going in the right asset classes that are least affected, or that are going to be in demand. For instance, if you're manufacturing testing kits for the viral test kits, if you invest, and these are actual examples of transactions that are there presented to the government to say those entrepreneurs and those private sector investors come to the sovereign fund with ideas, and they'd like to have that partnership with that particular fund as a partner vis-a-vis going to a ministry or going to a public health institution in that particular country. So I think this is where we can entice governments and de-risk that proposition by making a recommendation that says direct part of your QE towards industrial assets in the areas that you know for sure are least affected, and the appetite is there. So you relay that appetite based on your own reading of the markets, and it needs to be structured in a way that does not look, feel, or even translate to a nationalization of those private assets. It should not be the case.
Thank you, Ayman. Very succinct and to the point. And I think it's incumbent upon us. We have a very clear theme here. The way, if we look to where the other institutional communities have been successful, the model has been leadership from the institutional investment community, because at the Continental Business Network level, when we engage with the heads of state, I'm almost disappointed that I'm pleased when they respond to me and say, you keep talking about us, creating a more hospitable environment for institutional capital to go to infrastructure, but we don't know what we don't know. We develop a project, we get development partner money, we create a PPP, and then you tell us it's not structured in a way that it meets your investment mandate or criteria. So our promise in an initiative called the 5% Agenda to our heads of state, and it's not ingenious, it's just borrowing from the pensions infrastructure platform in the UK, where pension funds came together and they made a case to the Chancellor at the time and said, you think that we're going to invest in every single private finance initiative that you put on the table? No, we are not. We have an investment criteria, we have an investment policy. However, we are now going to pool our resources and we're going to tell you what our criteria is. And we're happy to even sit down around the table with you as you structure those transactions to improve the prospects of you being able to access our capital. I think that's what Solomon is saying, that's what you're saying. I think some of the critical things we need to do as a community, which is one of the areas that we're working on, and I think this recommendation can take it forward, is we need to be able to help governments understand what we need to develop and market and deploy capital to infrastructure as long-term investors and as equity players and asset owners. And I think most of our colleagues on this call would be able to share and feed into a model. The Australians did it in a very interesting way. When they engaged with government, they basically made the point, you seem to be very wedded to the development finance partners, PPP, public-private partnerships. We are not debt predominant players. We are more equity long-term players. But if you are so wedded to the PPP acronym, let's redefine it. And they called it pensions public partnership. And then they redefined a criteria and a model where, as the governments developed those transactions, they were able to create more investable transactions because pension funds had shared their investment criteria. And I think that's something that we can do quite easily as a group, help governments understand our investment criteria, even help to sit around the table with them as they structure and develop those particular transactions. And I think that's part of the point that we can address. But I'm going to turn to Nick Fursley now, who's the Director General of the World Pensions Council, because he, one, he has a time constraint, so he's going to have to dash right now, and two, he is also on the World Bank's board of the Global Infrastructure Investment Facility. Over to you, Nick, to share some very brief comments.
Thank you, Hubert, and I'll make it very concise. And I want to say that everything I'm going to say now is only and solely under my own personal capacity. It's a reflection of my own personal opinions. But very quickly, I think it's great what we heard from Ghana, because Ghana is in many ways an exemplary nation, and we can learn a lot from them. And what I mean by that is the following. You may have seen that 4 days ago, Euromoney magazine published this quarterly ECR, Euromoney country risk survey, which is very interesting. And in the latest Euromoney risk survey, of course, because of the COVID-19 and all the lockdowns and the recession, all nations in the rankings are going down. So all countries are collapsing because, of course, in the past 2-3 months, all the GDP growth projections for both OECD and developing nations collapsed, and it's normal that all the country risk metrics have gone down dramatically in the past 2-3 months. But there are a few exceptions. So there are a few countries that actually practically did not go down. So what are they, and why are they different from the others? And that very small handful of jurisdictions which were not heavily downgraded like the rest of the world are, predictably Sweden and Switzerland, right? But also Hungary, Israel, and Ghana. So fascinatingly, Hungary and Ghana and Israel were only downgraded a little bit in their country risk metrics. And that's really fascinating. So what I mean to say is that when a crisis comes, some countries that are doing things really well before the crisis, they'll be shielded from the crisis to a certain extent. And so what Ghana has going for it is, for example, that the rule of law, the respect for the sanctity of private property in Ghana, I'm sorry, it's like much better, not only that, much better than many African countries, but it's even better than some rich, developed European countries. I think it's very important if you want to attract investment from foreign pension funds or sovereign funds, to be able to prove that you have independent courts of law. So if one day something goes sour, so if you have a PPP with the Ghana Ministry of Transportation, or if you have a PPP with a certain Ghanaian municipality, if something goes wrong in the investment one day, if you as a foreign pension fund go to court, you will go to court in Ghana before a completely impartial judge who will respect the sanctity of private property, even when that's owned by a foreigner. So that's very important. Another quick remark that I would like to make, and I think I want to praise John as an Australian, is that what's really great about Australia, and what makes Australia much different than Britain, and I think Hubert, you mentioned Britain, and in England or in Britain, so far the results of their attempts to pool infrastructure money into infrastructure, these results have been a little bit disappointing. And in my personal opinion, it's not only Britain. In most countries, except perhaps Australia, and to a lesser extent Canada, so only have two countries, Australia and Canada. For the rest of the world, these attempts to pool pension money into infrastructure platforms hasn't been a big success. And why? In my personal opinion, one of the reasons is financial regulation. And we're all using these Basel II and Solvency II and whatever, Basel III and Solvency III ways. And what governments do, they force asset owners, they force pension funds and insurance companies to use these risk-weighted asset metrics to evaluate risk on their balance sheet, and they're not realizing that by doing so, by using the Basel and Solvency framework, they're really castrating investors, and it's a big problem because on the one hand, you have the same government who's telling pension funds and banks and insurance companies, yeah, go ahead, do like the Australians, put more money in infrastructure, and it's really schizophrenic because the same government instead of saying, oh no, we're using Basel III and Solvency IV, and therefore we have to completely limit, the risky asset allocation. To conclude, my personal view is I think we have to stop the schizophrenia and all get together and loosen these counterproductive Basel and solvency risk measurement metrics, because the financial regulators then they blindly follow them as if it were the gospel, and they impose them upon the pension funds and insurance companies, and they hinder their capacity to invest in productive long-term assets like SME finance and infrastructure. So I think, if the crisis can be used to put pressure on policymakers and governments, I think we should all do it.
Thank you, Nick. I think that's an excellent segue into Duncan. I think one of the things we've learned working on this area, in particular around co-investments, and talking to our colleagues in both Canada and in Australia, they made a very profound remark. They said, you seem to want to sacrifice a good project at the expense of a perfect project, because a lot of the way that the projects are developed and structured on the continent are against some very rigid development finance institution and Bretton Woods type criteria. And a lot of the suggestion is that the sort of the Australian and the Canadian model is a good project can be managed and can translate into a very good investment. The way that because has been designed and developed for very sort of how can I say overly conservative institutions, the risk profile in terms of developing the transactions is difficult. So the ability to de-risk early with our own community, and then be able to go to the regulators and the policymakers and explain these are some of the issues we'd like to have addressed, I think is going to be a very important and critical role that we have to play. I'm going to quickly go to Duncan, then I'm going to try and come back to Umbui, hoping that his microphone works. Does your microphone work? Umbui, I see you on the screen. Have we resolved the issue? Sorry, it doesn't look like we've resolved the issue. Duncan will speak now, and then hopefully you and I will have a WhatsApp conversation about how we might be able to get you on audio. Thanks. To you, Duncan.
Thank you very much, Hubert. I will keep these comments fairly brief. Let me start at a more macro level. So, in terms of things, so looking at across the continent, there are high levels of indebtedness, and so the firepower that central banks and governments have is fairly limited. So, whilst we've seen at 5% of GDP in developed markets, I'm just looking at the latest data. And that's best is 2 to 3% across the continent. Egypt is 2.54% of GDP stimulus. Morocco 2.7, and we've seen some actions from central banks. So Ayman said, I think 3% of base rate in Egypt, for example. So debt relief is going to be hugely important to create some flexibility within that. So that's going to be, there isn't much capacity there. And the IMF firepower, well, that it seems to me that there are very few qualifiers for that. So it is going to be of limited application in terms of that. So that leads you on to the point again Ayman made about if you like, on the equity side, and this is where a kind of a version of quantitative easing, but focused on those businesses that otherwise would be just racking up debt. And I think this is a really crucial point that sovereign wealth funds can come to the table with, which is about that as the vehicle that will allow that to happen. Because it isn't about nationalisation taking control, rather it's about a transit for these difficult times that allows those businesses to still function, especially in the strategic areas, as Ayman said in those terms. Now, just as a useful piece of context, in terms of any conversations, there is an intellectual underpinning to this that is quite useful. I'll happily share. There's an IMF paper which is something around called sovereign asset and liability management, and it's a whole macroeconomic framework that looks both at assets and the typical asset side of the business of a national balance sheet, but also does look at government liabilities quite specifically as well. It's quite useful if there is that intellectual underpinning that anybody needs in an argument. So I would go back to what Ayman said about sovereign wealth funds as a vehicle for this particular period to get us through the next quarter and the next 6 months, especially in those strategic industries. There's a big role to play there. And then the other point I would pick up is that the point Solomon made, which is about co-investment. Just as I think similar to Ghana, we've seen NIIF of India, and before that CDP in Italy and RDIF in Russia. They're almost acting as state-sponsored private equity organizations and attracting in external capital. And playing to the point that was been made about pension funds, what do they need to bring them into these investments? Then the other point I just wanted to make, which was about, and this is about the real economy, playing to the real economy of Africa. The relationship with China is going to change from a number of countries. And this isn't advocating it. This is not a Trump-style point. But what has been showed is just that China and the concentration of supply in China, as people are going to appreciate, does not make strategic long-term sense. So there will undoubtedly be a push for greater diversification of supply chain, in some cases rehousing it in the home country. But there will look to be more diversification, and that will be an opportunity for various countries across the continent. I'll probably leave it there just to say that looking at in terms of central banks, understanding where the support there needs to be debt relief, there is intellectual underpinning for sovereign wealth funds to have a more active role, and that is endorsed to an extent by the IMF, so that can be useful in conversations. And then what we have in a number of cases, Egypt's one, I've seen the news from Turkey as well. That's a good example of another country where sovereign wealth fund that help in this immediate period. So let me leave it at that point.
Yep. Thank you, Duncan. Well put, succinct, and adding on. And I think it's a good segue now into John on the statement, because we obviously have to bring together our cohesive views so that we can actually share them with not only the global central banking and policy making community, but also those across the continent. I'm going to pass over to you now, John, and then hopefully we're going to come back to Dr. Wakacha and hope that he can be heard by all. Over to you, John.
Look, thanks very much, Hubert. And as one of your previous, I'm very honoured and humbled to be involved in this conversation. I suppose I've got two hats on, or three, but two I'll focus on. Is one with the ICT, and the other is IFM. We are a $200 billion a year, a $200 billion infrastructure investment fund out of Australia. By the way, we end up in Africa by accident, not by design. It's actually after other acquisitions we do, we end up in Africa, and yet we're prepared to do hard investments in Latin America and elsewhere. So I think one of the comments by Nick before is really relevant to us. It really comes down to rule of law and understanding our investment thesis. And what we've discovered is that countries prepared to engage in that conversation are very attractive potential investment opportunities for us. But there's a longer conversation to be had. I can just make one other quick comment. This issue of trading more with each other than investing in each other is actually not unique to Africa, by the way. It's also a common theme in Asia Pacific. I formerly chaired Finance and Economics in the Asia Pacific Business Advisory Council. One of the things we noted was that there was an inability to get away infrastructure projects. One of the there was the capital markets in Asia are remarkably weak. They're not as strong, and they lack depth. And so one of our jobs was to I created a thing called the Asia Pacific Financial Forum, which was designed solely and with the authorization of Asia Pacific leaders to develop up the capital markets to enable more depth, to enable alternate mechanisms to be used for developing infrastructure projects. In Indonesia, for example, most lending is still private bank lending. They don't have the sophisticated instruments which are required for investors. So I apologize if that's a segue, but there's something learned, I think, from what's happened elsewhere. There is a lot of other regions where the challenge of investing within itself is limited. And I must compliment the most immediate speaker, understanding the shifts that are going to occur as a consequence of COVID, and in particular, this issue around supply chains. I think to underestimate the importance of the African Continental Free Trade Agreement. Anything that will ease your capacity supply chains be extremely attractive and actually will be a huge source of opportunity, particularly as supply chains become more regional in nature and less elongated than they were before. So facilitating that. My other quick comment, by the way, and ICC completely supports Africa PLC. This issue of digitalization, I was on a call last night with the Secretary General of the World Customs Organization, pointing out to him that actually one of the challenges in food movement, particularly in Africa, is there's still a requirement for paper-based documents to pass and wet signatures. So this issue about how we shift and use the opportunity in a way of a crisis, there's always less resistance to change in a crisis. Systemic change could be called for an opportunity here, where we could potentially get the African Union to look at and really comes down to giving the same legal weight to digitalised documentation as it does to and that is something I think could be a very powerful advocacy point for this group to push. The other point on advocacy I've just made, and I've been discussing with the guys who work for me in New York, who work particularly with the international financial institutions. The power of this group in terms of advocacy is that you are bottom up, if I can put it that way. The difficulty you have with international financial institutions and others is their predictions and prescriptions for change are often top down. There's a really powerful piece out of the granular nature and the focused nature of the conversations I've had. And so we think there's a real potential there. And there's also a movement which is actually really relevant. You know, there is actually a challenge, as you know, on actually providing financing more broadly in terms of Paris Agreement, which is actually not dissimilar to here. The financial markets and the Financial Stability Board is not helpful. We actually do need to focus on those sorts of entities as well, and not just on the gnomes of Basel on this. It's actually around the Financial Stability Board and getting some flexibility there. And I do think that we're going to see, and this is one project I'm working on at the moment with ICC, some tension emerging on another point that Hubert identified around trade finance. It's not that there's not enough at the moment, and that's actually because trade flows have actually collapsed by more than a third. It's actually there will not be enough available for the future if we want the economic growth to come back. There were reliance on about $1.7 trillion worth of trade to come in. There is not the financing available. So we'll need to focus on the export finance credit agencies, making certain they're better funded. We're going to need to focus on ensuring multilateral development banks actually buttress up their capacity to support, and we need to actually focus on Basel III, and actually we need to get more flexibility, and there is flexibility in the way in which risk is allocated to trade finance. So there are three things, and actually bringing your voices into that would be extremely powerful. I apologise, I think I've done 1 minute more than my 5, or maybe 2 minutes more, but thank you very much for allowing me to participate. I also, if I could quickly, I would like to catch up with the guy from One Planet. I launched this morning the ICC Carbon Council, because we are not going to wait for the creation of a carbon trading mechanism. So we're launching that. So if I get an opportunity, I'll send you a private. Anyway, thank you very much. Great to be involved. We're very happy to be aligned and
You're welcome, John, and thank you very much for your continued support in our work with the digitization of SMEs in the African private sector with Africa PLC, and of course, as you know, I spent most of my night yesterday with your colleague in New York after your gracious offer to take the pen on putting forward a statement that we can put out as a group in relation to the recommendation number 7. And I was very impressed with his commitment and some of his ideas and that we can share a first draft of this potential statement that he can put together with the group early next week, just in terms of demonstrating the role and the commitment of the African and the global institutional investment community and business community more generally. Let me see if it can be third time lucky with Dr. Wagacha. Can you, Dr. Wagacha? I think my recommendation to you, since this doesn't seem to be working, is that you dial in. I will move on to my next speaker in the interest of time, but I think you'll have to dial in. You're already on mute. Hopefully we'll be able to see you, but you'll be able to speak on the phone. But in the interest of time, I'm going to have to move now to Eloy. Eloy from... Hello?
Yes. Hi, Hubert. Thank you for the invitation to this call and to be part of the very, I think, fundamental discussion you're having within your network on how to respond to this crisis. I work for the healthcare sector in the Netherlands. We invest about 230 billion on behalf of about 3 million people in the Netherlands for their pensions, mainly people working in the health and care sector. And we invest that money globally. Actually, as we look at this COVID crisis, we think that it's going to bring very fundamental change. So first of all, when we look at the US and Europe, we expect there is not going to be a quick recovery. So maybe the markets are really being quite optimistic about the ability of governments to respond to this through monetary and fiscal stimulation. Of course, governments in Europe and the US are pouring huge amounts of money into support consumption and to support production. But we think that this recovery is going to be slow. It's also going to point to very severe weaknesses in our economy, which really require structural reforms to lead to significant growth in the future. So we'll clearly need a vaccine before we can really exit this very deep crisis that we're going into. And so that's bad news for Europe and the US. But I think on balance, it's quite, strangely enough, I think it's quite positive news also for emerging markets in Africa. Because you think about it, we already have more than 12 trillion in negative yielding assets in the Western economies. In my balance sheet, I am already investing more than 120 billion at negative rates. So how am I going to be paying for pensions in this crazy negative yielding environment? Especially when this leads to inflation going forward, because this monetization of debt at an incredible scale in the US and Europe is going to lead to higher inflation in the future. So it will lead ultimately to depreciation of the dollar. So now you're seeing a flight to quality in the US dollar. You see quite a strong euro still, but ultimately I think we'll see a repricing of currencies to the benefit of emerging markets. So this also leads, I think, to a great need for diversification. So the best way to protect yourself going forward is sensible diversification and exposing yourself to different sources of growth. And those sources of growth are going to be in Asia, they're going to be in Africa, with the world is not going to be the same, because I think it's been mentioned several times here that supply chains will have to be completely restructured. So Europe will have to look also to Africa for supply chains, different supply chains. And I think a lot of the industrial production out of Asia will also, for a certain part, be brought over and creating opportunities in Africa. You will need new infrastructure, so it's ports, rail. This will create very good opportunities to create long-term assets with stable cash flows if the governance is right. So what I really like, the example of Ghana Infrastructure Fund, leveraging up public money by 10, creating good infrastructure investments. And I think that is a model which is extremely promising going forward. Bringing in public money, but then leveraging it up and bringing in foreign investors to support the structural reforms in the country and bring more market discipline as the economy needs to develop going forward based on a stable rule of law and stable markets and infrastructure. So I think this is a huge opportunity for Africa going forward to take advantage of, let's say, the sense of urgency that a crisis like this creates.
Super. Thank you, Eloy. I mean, I think you've really validated a lot of what we've been talking about over a period of time, and I think we get to the point, and I'm always keen to be inspired by and also impress upon colleagues. Every institutional investment partner that we work with or we talk to internationally says we would like to see a co-investment partner that looks like us, thinks like us, talks like us, and shares the same sort of adherence to compliance and governance. And I think in some respects, whilst we are going to be able to leverage a lot of capital domestically, there's also very significant amounts of capital that sit in OECD that under the right conditions would certainly warm to and welcome the type of medium to high growth co-investment opportunities on the continent. And of course, you're very welcome to that. And once we will see our co-investment infrastructure platform together, which will develop with some of your good insights and input, we certainly look forward to looking at some partnerships with you in that respect. Really appreciate your participation. I'm now going to move to Obed, who's also going to be sharing some views from the Moroccan Sovereign Fund. The floor is yours, Obed.
Thank you very much. I'm really happy to be with you here. I don't have the opportunity to be with you last week, but just to say perhaps I will take much more than some minutes, more than the 5 that you have dedicated, to say that in our opinion, to spoke about two aspects. First one, what Morocco has put in place as a first response to the COVID crisis. And the second point will be what we think as a sovereign fund we can give our contribution in the long and medium term. First of all, I want just to share some preliminary remark to say that the impact is not yet completely known. I think that in the less developed country, with poor health infrastructure and the importance of informal economy, the impacts will be much higher than we expect and what we see in developing country. And in this way, we should keep open-minded and flexible, looking to concrete and looking for concrete and impactful measures, and avoid any emotional overreaction that we can see here and there. So, first point: what do the Moroccan government does in the first steps? Early health and economic measures. Morocco chose to take early measures to fight the pandemic before its spread become unmanageable. Confinement has been made mandatory only 3 weeks after the appearance of the first contaminated persons. The following economic measures have been taken. First, rescheduling the declaration of payment and taxes and social contribution for the companies. The instauration of salary compensation for people that suffered from job losses, and it's something that was new in Morocco. Installing a dedicated bank guarantee scheme called Oxygen to help impacted companies to have ease in access to credit, and the installation of delay of debt installment by bank for affected businesses. In addition to that, Morocco has embarked in a challenge to domestically secure some goods required to cope with the pandemic. The Ministry of Industry has initiated a shift of some member industries and manufacturing to produce protective faces, masks, and respiratory machines. And so far, Morocco is able to produce no less than 5 million masks per day. And for the governance, the Moroccan government has installed an ad hoc vigilance committee that is dealing with any news aspects that are related to the crisis. In this dynamic, His Majesty the King has initiated the creation of a special and dedicated fund that we deal with the COP29, and this initiative is a great example of cooperation and coordination between different actors of the economy. Fund has reached $3.3 billion so far, and it is used to help all the impact that the COVID has impacted the Moroccan economy. So measures are still on the way, and what we think from our side. And I come to the second point of my intervention, which is what is our understanding of the issue as a sovereign wealth fund related to COVID-19. The pandemic crisis is of a different nature. It is first probably will be deeper and longer than the previous one in 28, and many economic shocks are or will take place. First of all, I'm speaking about the case of Morocco, which is a country that is related to international demand from import. We are seeing also a decline in the domestic demand with the shut and the disruptions of the supply chain, causing a decrease in supply also. Last and not least, a decrease in hard currency sources due to shock of commodity, tourism, and remittance, and foreign direct investment. All the productive sectors will be impacted with a high risk of collapse. Hence, the need to have a coordinated, comprehensive, and a targeted response to support the continent economies is one of the major aspects that we should concentrate in. It is for sure that a new world is emerging, and that will reshape the global value chain, as we have heard earlier. We will experience also change in priorities also with government and consumers. Opportunities to launch and revive some essential industries became more and more important, like healthcare, agriculture, activities that can outsource foreign currency, need to reinforce and develop the health infrastructure, but also the competitiveness and the resilience of the economy, to reduce the dependency and to develop more integrated and local consumption supported industry, and to rethink about some sectors that perhaps will change forever. Fiscal resources and international aids will not be sufficient to address all these needs from our understanding. That's why we need to think about an alternative ways to mobilize resources, and especially from abroad and private sector more efficiently. We heard about the foreign investment and the investment money that can be available, but we heard also about the fact that developing markets has lose a lot of money. We need to approach fund providers in a more professional manner and structured manner. I think that it is time to improve our way of dealing with that. The quality and the quality of projects that should be prepared should be improved dramatically with a very good quality risk profile, and also having economic and social impact to improve their acceptance. So we think that sovereign wealth funds and especially developing investment ones are needed today more than ever. The sovereign wealth funds may have and should have a key role to help their economies cope with the situation on the long term. Besides the urgent medical and humanitarian needs, government should think and work on a long-term objective to avoid or prepare for such crisis. Their role is essential in medium to long term. Here in Morocco, we don't think that we have a major role to play in very short times. There are other dedicated bodies that can give the relief to the affected companies, but we think that we should readapt our strategies and readapt our goals to be in line with the new shape that the world will be after the COVID. For that, we see that there are 2 or 3 stages, 3 to 9 months urgent needs. This is what we have talked about. For 8 months, effort toward priority and strategic sector, like providing capital to sector and companies that are viable in order to help them overcome turbulence. Distinction has to be made between viable companies that are facing difficulty that is due to COVID-19 and companies that have a non-viable business model. And for more long-term, which means 2 to 5 years, long-term and strategic thinking to rebuild more resilient and sustainable economy, looking to improve infrastructure, job creation, and foreign currency. That's why ITMAR has initiated 10 years of discussion and initiative with partners and be to understand and anticipate what could be coordinated actions to attract foreign development institutions from DFIs and international investors. So as a closing remark, just to say that cooperation between African institutions in general and sovereign wealth funds in particular is urgent now more than ever. We have always been a strong advocate of such cooperation through continuous dialogue with several institutions taking part in this very webinar, such as our strategic partnership with the NSI and my dear friend Uchi, who is not with us today, and with the respectively, and a Pan-African initiative sponsored by the World Bank and ourselves called the Green Growth Infrastructure Facility. We believe that we should take our dialogue on a common objective to the next level in a structured initiative to put together our agenda, help our respective countries, but also help each other. We will be more than happy to share with each one of you in the future what we have been doing with the World Bank since the last meeting we organized with Abu Dhabi Investment Authority in Abu Dhabi in last November, And we take this opportunity to thank you again for the honor and also great opportunity and responsibility to give us in leading the Pan-African initiative as proposed by my dear friend Uche. Finally, we have also dialogue with good humor, and we will let you know more in the future. And that was my remarks, and thank you for your attention.
Thank you, Obed. Great remarks and great to have you as part of the African Sovereign Wealth and Pension Fund Leaders Forum. I think one of the key points that we've been talking around is, the state and impact on the capital markets in Africa. So I'm very glad to introduce now Edo, who, as I mentioned at the beginning, is the Chief Executive Officer for the BRVM Regional Capital Markets in West Africa, and also the newly elected President for the African Securities Exchanges Association. So Ed, it would be great to give us, your view about where our capital markets are. What are your thinking? What's your thinking as an exchange CEO yourself, and of course, over 20 CEOs of the Johannesburg Stock Exchange, the Nigeria Stock Exchange, Nairobi Stock Exchange. They're all your members. So please share your views in the response and the recovery dynamic, and where you feel the sovereign investment community and the pension fund community and endowments and long-term capital can play a role. Over to you. Are we having another? If you unmute, let me see it. Yes, we can hear you.
Okay. I think that it is a good opportunity given to the African security exchanges to share our view and perspective with all stakeholders, especially pension funds. As you know, the ASEA, our association, is the premier association of security exchanges in Africa, with 25 exchange members, 1.5 trillion market capitalization as end of 2019, and we have also 1,250 listed companies on the continent. Our mandate is to facilitate fair, orderly, and transparent market for investors and issuers in Africa. And in this special period, what we have taken action is to be sure that we can fulfill this mandate. And we have taken three types of action. The first one is to relax or change some rules in terms of market requirement, because it was important for us to accommodate the listed company in terms of postponing the annual general meeting to be sure that they can have more time to prepare it. We also make some provision and permission to conduct AGM online for some companies. We also shortened our trading hours in many of our exchanges to be sure that we can accommodate the new decision taken by some public powers to be sure that people can leave earlier their office. We, as exchanges, also we have make the activation of our business continuity plan. Many of our exchanges are fully automated markets, so it was easy for us to facilitate remote and safe access to our trading platform for brokers while trading continues with the normal trading hours. In some case, when we have a lockdown in some countries, we have facilitated the relocation and of the essential staff members to secure accommodation closer to the market premise, like Nigeria chain. We have taken also some action in terms of health and wellness to be sure that we can comply with the World Health Organization recommendation and also national government recommendation. We make some sensitization through our market to be sure that our brokers, our asset managers, listed companies, retail investors get the good information on what we have done as stock exchanges and what they have to do also in terms of health and wellness. So I think that we take all the action that are necessary to preserve our market, to preserve the integrity of our market, and also to be sure that we can run our business in the normal way. And I think that can be seen actually as a success because all our markets are open and we are trading in the normal situation. For me, I think that the African Sovereign Wealth and Pension Fund could play a unique role in response and recovery. As you know, African markets have not been spared by the effect of the COVID-19 because if you compare the performance of our market through the continent, you can see that the total value, that is a good news, the total value traded among African exchanges in Q1 2020 increased by 8.5%. That is good compared to the last year. But the market capitalization globally dropped by approximately 10% on the continent. We also increased the bond traded value because, you know, investors prefer safer investment option during this crisis. In terms of opportunities for African sovereign wealth and pension fund during this challenging time, we think that first, that can be an opportunity for a pension fund to increase the value of their investment by buying more stocks. As stock prices have decreased, as you can see it with our FTSE as their index. So it is an opportunity to invest now in the market. The pension fund can also consider diversifying their portfolio by investing in some hard assets like gold or property. You have some ETFs that are listed on Johannesburg, Botswana, Namibia, Stock Exchange, etc. And finally, we think that is important as some recommendation or measure to take for the recovery. To consider that the pension fund can massively invest in the government bond because you know that many governments are considering issue of some long-term bond after the crisis. So it can be an opportunity to accompany this kind of action taken by our government. Even if they need to have some fiscal incentives, we can consider that and talk to our government on this. We think that is another opportunity also that the government can take is to issue maybe some social bond, green bond, and red fund, new fund to fight against COVID. So that can be also an opportunity for pension fund to participate in this operation. So that is my thoughts, and I think I would like to congratulate Uber for this initiative, and also assure fund that the exchanges in Africa are keen to be with them to accompany them in this combat with this pandemic, and also give them the opportunity to play a key role in terms of recovery of our economies on the continent.
Thank you, Edo, and we really appreciate your input. For a critical member of our ecosystem and constituency, we require the markets to be functioning well and strong, and whatever we can do as a community to share our experiences and continue to collaborate with you. You know that you've been partnering for a very long time. In this respect, I think we also look forward to your ASEA's participation on the business statement, just to give that capital market leaders perspective as we put the statement together and share it with the ministers of finance, the central bank governors, and the other multilateral and bilateral institutions involved in both public and private sector finance. I'm now going to move for hopefully the last time to Dr. Wagacek. Let's see if we can hear you now. Are you trying to call? If you call me on WhatsApp and I can pick it up. Okay. Dr. Wagacek was going to be covering the recommendation on institutional investor research insights. And it's so unfortunate that we can't hear him because he put together an excellent terms of reference yesterday. And that terms of reference, I'll just quickly run through some of the key points. But it's essentially a document that sets out a number of key areas that he believes that we can... Hello? Are you here, Dr. Wagacek? Okay. It's a seminal piece of research. We will circulate the terms of reference. He put a lot of work into it, so it's such a shame that we can't hear him. But it really talks about all of the key thematic areas, issues, and sectors, and highlights what the macro and the micro position is, and then demonstrates and allocates roles and responsibilities for a number of different key constituencies. One, government; two, industry, in terms of the asset owner industry, both within and outside the continent. And also it has a focus on the role of multilateral and bilateral development and finance partners. It's quick. Just to give you the quick overview, it's suggesting sort of 6 areas that this piece of research will take: macroeconomic management, sovereign wealth and pension fund dynamics in the COVID environment specifically, looking at the SME supply chains and trade support. So it's essentially a report that he's proposing under that recommendation that brings together all of the key recommendations into one sort of compendium of documents, one specific report as well that can be shared with the respective stakeholders. So, I'll leave it there. We apologize, Dr. Wagacek, that you didn't have connectivity, but hopefully you've been able to take some of the elements from some of the other colleagues. Hopefully we'll be able to incorporate them into the terms of reference that you labored over, and hopefully we'll agree that we can share them with our forum members for their feedback and comment. I know that we are grossly over time, so I'm going to very quickly open up the floor now for any reactions to the presentations that we've had. If anyone would like to contribute, make a comment, react to any proposal or any of the recommendations, the floor is yours.
I have one, Guillaume.
Okay, hello Guillaume.
Yes, hi again. So thank you so much for all the presentations. They were so interesting and insightful. Linked to the recommendation number 2, I'd like to ask you how much the climate-related risks have evolved or will evolve in the light of the COVID-19, and especially the investment on the health infrastructure. So I think that's an important aspect to embed in the thinking of this recommendation. That's a question contribution.
Thank you, Guillaume. That's a great question. As I mentioned in the beginning, we worried about this particular pandemic we know for sure that we're going to see another one within the next 6 years, unfortunately. So we need to build resilience wherever we can. But it's very well understood and appreciated that in parallel with this pandemic, climate change is happening, and can affect our portfolios and markets in a similar or more catastrophic fashion. So we therefore very much look forward to One Planet's input into our statement that the International Chamber of Commerce are going to be taking the pen on, that we will all subscribe to as institutions. But perhaps, I'm not sure if anyone would like to take that particular question, or who has the statistics. I personally do not know the exact figures or broad figures, but all I do know is that there's a heavy and timely emphasis. I think, I came to your meeting in Paris just recently. The whole issue is there are these large consortiums like yourselves of sovereign wealth funds, and then there's a group of pension funds that are focused on climate. And when I go to the meetings, I see very few colleagues from Africa. But yet this is a big global issue on the climate change and institutional investment side. So I think that this is something that we're going to continue to work with you on, and continue to try to get the data and get access to that best practice and feed into the best practice as well. And I see that Solomon from the Ghana Infrastructure Investment Fund would like to comment as well. Over to you, Solomon.
Yeah, just a quick comment. I mean, the reality is that if we don't address that in Africa, we don't make it part of our criteria, we won't get the funding that we desire. You cannot do any infrastructure in Africa and get any kind of international funding if you don't pay strict attention to the environmental and the climate issues. So I think the more and more that's almost not worth debating anymore. I think most of the governments recognize that. Now, where there is a need is to build capacity within the continent and within the governments and within the local private sector to be able to make sure that sustainable issues are incorporated into their investments, their infrastructure investments. And that's where additional support and training is required. For example, GIF as an institution, we are at the moment in the middle of sourcing some lines of credit from DFIs. And we told them up front that, yes, of course, we buy into the need for sustainability, but quite honestly, we don't have the capacity. So they're making a component of the funding that they're bringing to us to help us train and to identify individuals, specialists in this area, come and work with GIF and help build our capacity as an institution, so that automatically we can see these things in our projects that we do. So I think it's the two-pronged approach. One, this is where requirements, but two, do you need help to be able to implement those requirements? And I think both parts are necessary, and I think both parts are welcome.
Yeah, Solomon, you've touched on key points. I went to a meeting just recently of asset owners. I won't name the country. And the government was there. It was all really about the Paris Agreement, how asset owners could allocate and contribute to that agenda. I asked an interesting, and there was a lot of pressure on domestic asset owners in this particular country to really support the government in its drive to invest more, being sensitive to ESG and climate change. I asked one question. I simply asked, what are the government in question's commitments to the national commitments that they give each year, that they enumerate and document? What is this specific government's commitments to the Paris Agreement? Nobody could answer it. So at the one hand, everyone is saying ESG, jumping on the bandwagon. No one can enumerate it in such a way that we can look at it. That's one point. The second thing that we're looking at with the CFA in New York, which is a project that I'm leading actually, to address this issue of, so it's all fair and fine to look at climate change, it's all very fair and fine to look at sustainable development goals and ESG, but you cannot measure the impact. So we're currently working on a tool. We've got a brain trust, which includes the usual associations of asset owners. We're working with GRESB and the Cambridge Sustainability Institute to put together a criteria that measures impact for asset owners and institutional investors on ESG and on the sustainable development goals for real assets, specifically for infrastructure. We're starting with private infrastructure, then we're going to move to broader or other portfolios. But it will give us then the ability to actually be able to not just say we're pursuing or we subscribe to the principles of one or more of these particular important approaches, be it ESG or SDGs, or in Africa, Agenda 2063, which is analogous to the Sustainable Development Goals, as you know, but we can actually measure it, so our boards of trustees can actually take a decision on it. The pension fund staff, the sovereign wealth fund investment staff, can actually use this tool as part of the decision making. So as an industry, well, we're also sharing that with you so that you can give us feedback about would this help you, because part of the challenges that we've actually had is what level do you pitch this tool? To the investment staff or to the board trustee that doesn't necessarily have that technical competency, and also the investment consultant that is advising the board and the plan or the sovereign wealth fund. So again, I'd like to, as we look at our work with the respective governments at the AU and the presidents, as we have been on the infrastructure co-investment platform, that is going to be one of the instruments that we're going to run alongside it, because here we've made very clear ESG compliant infrastructure co-investments. So to sell ESG, even amongst our own investment committees and colleagues, we're going to really need to demonstrate what the impact is, and hopefully we can come up with some model, maybe with One Planet and others, to incorporate almost like a toolkit for us to be able to address that issue. I'd like to keep the floor open with other people's comments, so please feel free to comment.
Yes, Hubert, I'd like to add to that. This is a very important development. How can we map our investments towards companies contributing to sustainable development goals of the United Nations, both in public and private markets? So actually PGGM and APG are launching a platform this summer, which we call the Sustainable Development Investments Asset Owner Platform. And there we are going to be making available a simple tool that will allow at least public markets investments, about 10,000 public quoted companies, to be mapped to sustainable development goals.
Fantastic.
That technology is going to be driven by artificial intelligence. So we're going to be scraping the internet continuously for patents, for conference calls, for annual reports, any kind of data, analyzing that through a AI, artificial intelligence engine, and then coming up with information on these companies and mapping them to sustainable development goals. So that's one objective we have, and ultimately that will develop also into being able to measure impact. So phase one is to be able to map companies to SDGs. Phase two, we want to be able to map, to be able to measure the actual contributions. And we're experimenting with that same technology on our private markets investments. But that is very much still bespoke and internal. But the public market side of this will be brought, hopefully, to the market this summer.
Okay. Fantastic, Eloy. That's excellent, because we're working on the private market side in terms of infrastructure or real assets. And Cambridge, in fact, it was Prince Charles that put us in touch with him, because he's one of the patrons for this particular group. And we were looking to launch something around the Commonwealth Heads of Government meeting, which was going to take place in Rwanda, about this particular tool that will enable asset owners to actually measure it. And then we were going to do a roundtable during during COP26 in Glasgow, which unfortunately has now been cancelled. But I believe that we should work together on this with our group members here. pull that knowledge with Guillaume as well from One Planet, because we're all effectively going in the same direction, and the more we can harmonize the tools and the syntax and the way that we can explain and utilize some of these instruments, I think we've got a very important contribution to make.
I agree. Yes.
Yeah.
Thank you.
Thank you. Any other questions from the floor?
Hubert, this is Richard Collins. May I just make a couple of observations?
Absolutely. Go ahead, Richard.
First of all, once again, many thanks indeed for inviting me to observe at this meeting. It's been really, really helpful, and such a sort of great deal of enthusiasm about going forward. I think the only points I would like to make, and I will keep it brief, is that I think everybody obviously agrees that it's going to be a very, very different new world after COVID-19 current sort of situation gets back. Well, I don't think it will ever get back to normal, and I think that that's part of the issue, because none of us really know what the new world is actually going to look like afterwards. And some of the behaviours of people may be very different, and that's, the conversation that was had on the infrastructure. Is the infrastructure sort of building and the infrastructure development going to be the same as perhaps it was envisaged 6 months ago over the next 5 to 10 years? And I just wonder whether there's a period of reflection while people actually really sort of think about what the new world may look like. But one of the aspects that I think really has come out of this is the climate change that you were just looking at, and really just leveraging off and going back to that thing about One Planet. And One Planet was a sort of initiative, as you rightly say, sort of championed by President Macron, and it was all designed to accelerate how the financial markets are approaching climate change considerations, not really to reinvent wheels. And I mean, I don't know whether people saw, but there was a rather classic, one of these things that went around on WhatsApp, etc., about the world saying there's no way we can shut everything down, we'll lower emissions, slow climate change, and protect the environment. Mother Nature, here's a virus, start practicing. And in some ways, although that may sound very facile, it really has accelerated the thinking about climate change considerations. We're all experiencing and seeing how climate is very different now, even than it was sort of 4 months ago with the pollution in China, etc. And all I'd say is that just really sort of endorsing what Guillaume was saying, One Planet is something that we are very proud as the PIF in Saudi Arabia to be a founding member of. It's an initiative that's specifically designed for sovereign wealth funds. It can be applied within any sovereign wealth fund, notwithstanding that each sovereign wealth fund may have different investment portfolios, different operational models. It's simple. It only has 3 principles. It's designed to be the accelerator. It aligns to the Paris Climate Change Agreement. And as the sovereign wealth funds in countries are generally custodian of state funds, by extension, they're generally committed to it. And it's voluntary, so each sovereign wealth fund can go at its own pace. Sorry, that's just a little push for One Planet, but I really think that, with this COVID-19, it's a great opportunity to actually come on board and really help it moving forward. Sorry, and that was all I wanted to say. Apologies for taking up that time, but just to say again, thank you very much indeed for inviting me to observe here.
No problem. I enjoyed being with you all in Paris during your last meeting, and one of the conversations that I was having with Lawrence and the colleague from Ahmadi, and even some of the people from the Elysee Palace, from the presidency, who came and spoke, is that they are looking for a much stronger engagement. I put ourselves forward that we were, to use your phrase, you're pushing One Planet. Well, I would say that you're pushing against an open door. We all care about the planet, the entire planet, as well as our own portion of it. What I'd like to be able to, with you and with Guillaume and with Lawrence, is really to structure a way that we could sit down and focus on what that linkage might be, particularly to be more familiar with some of the Africa issues, with some of our forums work and see where we can actually move ahead together. Eloy's already highlighted something that we can take forward together. We're already working with the International Chamber of Commerce on a similar climate-related issue. We've just connected International Chamber of Commerce with One Planet. We are all in the same space, and the more we can collaborate, the more our constituencies would benefit from, a centralized leadership position that sounds the same than perhaps different initiatives. So, Richard, Guillaume, Lawrence, let's have a call, see how we can organize ourselves to really be effective during this period.
Great, thanks.
Wonderful.
To share knowledge, yeah, exactly.
Fantastic. We appreciate that. I know that we're so over time. So before I wrap up, is there anyone else that has a question they'd like to pose or one they'd like to respond to?
Yeah, so it's just a quick comment to say, thank you very much for inviting Batseta to the conversation. I am very surprised how aligned we are, on the kind of issues that we've discussed, and thanks for sharing best practice. I think at the moment what we are busy with in South Africa is to make sure that we protect our pension fund system. That is the one conversation that we are having in terms of employers that are, on contribution holidays and not paying risk benefits, etc. And the second conversation, obviously, is to make sure that we continue our discussions around infrastructure development. So I will most probably, subsequent to this meeting here, contact and see how we can have further conversations. Thank you very much.
Thank you, Anne-Marie. I mean, we've been working very closely on this for a good while. So happy to continue that. And I think it's also well known that the South African pension fund industry, just in terms of quantum of assets, is probably about 70 to 80% of all pension assets in the entire continent. So and then on top of that, the South African pension fund industry actually has a dedicated up to between 5 and 25 or 30% that can actually be invested in the rest of the continent, which is why I always implore colleagues that it's going to be so important for your transactions to be centralized so that we can actually promote them. I think Anne-Marie will attest to the point that part of the reason that the South African allocation to the rest of Africa is not being utilized is because they don't necessarily have good sight of some of the investment opportunities. And I think each colleague here around the table has very good sight of investable opportunities, and that would be of interest to not only South Africa, but also other colleagues and vice versa. So one of the takeaways, and I'm going to use this to wrap up now, I think one of the key takeaways that we have here is that there's a strong commitment to our approach and our intent to really facilitate a better environment for institutional capital to flow into African infrastructure. I think we are clear based on last week's recommendation and this week's discussion that we need to accelerate, an African institutional co-investment platform led by African pension funds and sovereign wealth funds that can start with, at its most simplest level, sharing of pipelines, and we'll circulate a note about how in the very first instance we can create a safe and confidential environment for projects or project teasers or templates to be shown, so we can begin to educate the market on where the specific investment opportunities lie. I think another takeaway from today is that we understand that we don't know what we don't know, and that is predominantly what the new economy is really going to look like and how it's going to play out. And in that respect, the way that we can, as they say, the best way to predict a trend is to create it. So our ability to be able to get close to and work with the central bank governors and the policymakers is going to be a critical and important move, so we can help them think through some of the planning related issues, some of the investment and capital requirements that we can potentially contribute to, and that we can better understand ourselves. And I think in that context, this digitization agenda cannot really be underestimated. So we'll also be hoping that we can find ways to collaborate on the Africa PLC agenda in your own countries, where with UNDP, with the ICC, with Ghana Infrastructure Investment Fund, with the African Continental Free Trade Area Secretariat, we'd love to be able to come to Egypt and say, Ayman, you probably have some of the companies that would benefit from this within your own asset base, within your own portfolios. How can we work together to enfranchise them and give them more opportunities through the technology across the continent? And then, so I think the statement that the ICC are putting together is something that we will look to circulate early next week. And then I think Gail and Richard and hopefully Lawrence, we can maybe arrange a call to discuss the climate change opportunities for collaboration between the African Sovereign Wealth and Pension Fund Leaders Forum and One Planet, and try and formalize some form of ability to share best practice and participate in each other's dialogues, which will probably be virtual for maybe until the end of the year, but who knows. And then Dr. Wagacha, you can see right now, as I said, put together a terms of reference for a very specific and high-level roadmap and report on the impact and the role of African sovereign wealth funds and pension funds in the recovery process, and we'll circulate those terms of reference. I know that we had a meeting last week, and we wanted to follow up very quickly so we could crystallize the recommendations. My proposal is that we perhaps have another meeting in another couple of weeks, subject to availability. But in the interim, we will circulate the statement for your feedback and comments, which hopefully that could be done and turned around within next week. ICC have said that they'll be able to get the first draft to us by Wednesday. So as soon as we receive it, I will share it with you. And then also we will also look next week hopefully for your email feedback on the terms of reference for the research project that Dr. Wagacha is leading. So I think with that, I'd like to thank you again very much for your extremely valuable and insightful contributions to this discussion. Hello?
Hello, can you hear me?
Dr. Wagacha.
Yes, finally. My apologies.
Okay. Can I give
you gave a very good rundown of what I was of the thoughts that I was going to give. My apologies to everybody, but I sat as a very good student. I learned a lot of things, and I'm so happy to hear that the way you summarized the research ideas that we've touched on with you.
Okay, excellent.
Yes.
Thank you very much, Dr. Wagacha, and we will talk. I won't trouble you over the weekend. You spend that with your family, please. And but Monday, let's see if we can pick up this conversation. I wonder if we could just remain on the line just for a second. I just received a call from Uchi Orji. Obviously, he was in the meeting. He recognizes that we're about to leave, but he just wanted to say goodbye and but not obviously give a presentation of any kind. So he's going to be joining us imminently, if he's not already on the line.
I'm on the line, and I'm terribly sorry, gentlemen. I had a board call that I thought would have ended about 3:30, but it lasted much longer, so my apologies for that. But I will be following up with Hubert and everybody here based on what's been said so far. But purely on our side, I think the investment themes remain more and more compelling. We're seeing these opportunities coming up now, also as a once-in-a-lifetime opportunities to actually put money to work, but in general also as an opportunity for collaboration. Nothing has unified the world more than the way COVID has. This is one thing that has affected everybody. And in so many ways, we're seeing it as also as an opportunity for collaboration and joint collaboration. But I also see more of an opportunity for regional, and by regional I mean within Africa, collaboration. We've been talking about it and doing it in disparate terms, but I think there's a lot more that can be done. And based on what I have seen in the last week alone, based on calls we've had with some people and some of you and a few other collaborators, this whole theme of co-investing has become very compelling, and it's something I believe will emerge from this COVID as something that becomes really tangible for us to pursue. But I want to thank everyone for being on this call, and I'm looking forward to the next one. Thank you very much.
Thank you very much, and I think that's a great way to end. And I don't think there's anything else to add other than please stay safe, everybody, and I look forward to following up with each of you in the coming days. So with that, the meeting is formally closed. Thank you very much.
Doing business in Africa. You can't afford to be without Africa Investor.